Hey traders, what's going on? Jamie Saettele here with the Midweek Strategy webinar for August 5th, 2015, here for SB Trade Desk. Um, got a good amount of dollar stuff to go through. Welcome to August. It's continued chop fest going on here. First thing I'm going to do is go through some of the recent trades and why they were done. I think it's important to understand, um, you know, why trades are made. And then we'll talk about just kind of go through the majors and the dailies and stuff that's posted on the weekend and see how they're doing. And then I'll take questions there towards the end. Okay, so you can put up questions, but I'm not going to read them or answer them really towards the end of the session. All right. So let's get to it. Okay, so talk about the pound dollar trade that I did last night. So this is the really short-term chart, okay? This is hourly chart. And after yesterday afternoon we had rallied up into the, obviously we're in like the third day of the month, right? But the month open price, after a day or two, can be used as a decent point of reference, okay? And in the case of pound dollar, we had rallied up into it yesterday afternoon, failed, sold off very hard from that level. Okay. And so the thinking was, one, with BOE coming up, I want to be long down in the 55.10 region. But since we sold off here yesterday, thinking was that if we, kind of eke a little higher into resistance, then we'd have a chance to short and take it lower into 55.10 and then flip to the long side after that for BOE. So that's where I was with that. It's very simple. It was that the market had sold off very hard from the month open price, which is obviously just a day earlier. But we also had a decent looking, very short term slope here to work with, right? It was this one right here. So, you can see we had a lot of trading around the median line. Market had just yesterday afternoon, when I would have been writing this piece, it would have been trading right about here. So thinking is that we would rally up into Europe and fail, and then have the opportunity to take it down to 55.10 and then get long. Well, we did rally into 56.04 was the entry, and actually it would have been 5 a.m. in New York, so it actually did fail pretty hard at 56.05, traded down into 55.70. So we did trade off 35 pips within 2 hours of that entry. But, once again, it's been the kind of the story of my life in trading here for the last couple of months. Get a good entry, what you think is a good entry. Market trades off hard, then rips face the other way, stops us out. And now here we are sitting at where entry would be. So that's why that trade was done. We'll look at the pound daily here in just a moment. But there's I guess a longer term line probably should have paid attention to a little more off the highs back here in June, and it's crossed these highs, back here, July and the last, 29th, 31st of July, and then today's high so far. So in any case, that's why that trade was done. Typically a pretty solid setup that I like when, you're working with the month open, especially the month open, week open too, but especially the month open, and you've got the slope there. So it felt comfortable putting the stop above yesterday's high, which failed at the month open. Okay. Not to be. Dollar yen, again, we do have that analog that we've been following. And, yesterday, right after the market hit the entry, kind of right here, it was 24.13, and I didn't like it right away. So that's why I had put on the swing update to get out of break even, which was 24.13, okay? But then this morning, I had noticed that there was, much like pound dollar had the slope from the June highs, well, dollar yen had a slope from the June high as well. and it crossed the high just again from last Thursday's high. Okay, so we had that going on. The fact was, when I woke up this morning, I almost woke up and expected to be stopped out at 24.65, considering where we were trading yesterday during Asia. Well, since the market hadn't done that yet, figured that there was basically it hadn't, your worst fears are not confirmed, right? It hadn't stopped you out. So the fact that it hadn't said, what, if this turns down, you might as well let it ride, because we do have this bearish slope here. Decent touches here 3 times. Decent parallels, decent action on the parallels, the support down here and everything. Even some of the internal trend lines were pretty solid. Gap here on one of them. Decent pivots. So, this one might actually work. Well, looked like it was going to. Trade all the way down to 124, hit that trend line, and right back to the highs. So at this point, dollar yen, haven't really had a beat on this one for a long time. You remember we had this great short position up here, and it missed our target by 50 or 60 pips, and then came ripping back, sold more, and that's kind of when things started falling apart, as far as trading so far for this year. So, it's just been thrown off, been a very difficult, been off balance, and been a difficult couple months, to say the least. So that's why those trades were done and why I treated them the way I did. All right, so enough of that. Look forward now. Let's get into some of the majors and some of the euro crosses, the stuff that's posted over the weekends. Talk about some of these pairs. All right, so euro, same deal here. I talked about that high volume level. Remember that that was the weekly close. This is a daily chart, but that's the 320 close, 108.25, and the chart that I had showed you before. And I think it was Sunday's post about the euro and the volume stuff. Pull it up right now. That was right. So here we go. Right. So you can see the huge volume levels, the red bar here. Okay. And the close of that bar, again, these are futures charts and futures prices. So it's EC, not euro dollar. But, you can obviously use it's basically the same way. Right. So the close of that week, huge volume level. And I don't think it's a coincidence that the close of that level has been really big support, basically, every time it's been touched or reached. And we're actually getting close to it again now. So, interesting to note that if the euro breaks down sharply below here, then hopefully we're still in euro yen and that ends up working out. But basically, I just wanted to kind of show you why 108.20 is such a big spot for the euro, and kind of show the examples moving forward or going back in time of why why the big volume levels can be so useful. Much like the month open, right? You get the touch and go trade, you touch that level, and then you take off really sharp in the other direction. So we've had a lot of that here, in the last few years as far as the euro is concerned. And by the same token, if this level doesn't hold, then kind of good night euro again. So huge spot as far as the euro is concerned. And getting to that euro, looking at it right now, I would still look at this as potential support. Basically 108.25, 108.30 or so. Nothing bullish to work with at this point. The only bullish slope line I would have would be down here, and that's just the trend line from the March and April lows. And again, that would be below the volume level. So if that were to break, and you got here, I wouldn't even be comfortable really buying euro here, just because you would have already broken the volume level that I talked about at 108.24. So with euro still, it's still in a downtrend. We had this resistance flagged 2 weeks ago, got up here, didn't take the trade. Friday's move was just, I mean, that was stupid, right? Market traded, was at 109, rallied 200 points in like a half an hour, up to resistance, failed again, and here we are. So, difficult environment, but would still be paying attention to this slope line as resistance. Okay, so support 108.24, the volume level, and this median line. Resistance up here in the slope line, which is, it's been resistance, so would expect it to be resistance again if we get there. Okay, now something that I do want to address, because it just happened a couple hours ago, is the fact that the dollar index, the ICE dollar index, right, just made a new high, multi-month high. We just traded up, to above the July high, and the April 23rd high is the highest we've been since that point. So there's resistance higher, and it's uptrend resistance, no downtrend resistance here. Let's see where this trend line comes in. Actually, that would be interesting. So you do have the trend line there with a confluence with a couple upslopes, for the U.S. dollar index, the ICE dollar index. Okay, but the fact that we've made a new high above July's high here in the dollar index, and we have not done so in the euro. Okay, that is a divergence. Okay, and it doesn't mean that the market has to turn around, but it is something that happens a lot at turns. Okay, where you get one of them not confirming the other. Whether you get a new low in the euro and not a new high in the dollar index, or you get a new high in the dollar index and not a new low in the euro, as we have right now. Sometimes that is a pretty, it's a warning sign, right? Basically, the market's not confirming each other, so heads up on a turn. In general, this dollar's been, it's been a nightmare. This goes back 3 weeks of trade now, and really you could say it started here, the first week of July, where things just started getting real nasty as far as, dollar trade's concerned, right? We get a sharp drop, sharp rally, sharp drop, sharp rally. Since then, we've had some sharp declines from important resistance, right? So each time you get a sharp decline like that, you kind of, you're like, well, this is it, right? Because, this market's so overheated as far as sentiment's concerned, and, everyone and their grandmother's looking for the bullish breakout. Well, typically, those are the types of environments that lead to strong moves in the other direction. Even if you've been a dollar bull up here, you've probably gotten chopped up because the market has, come off and then come right back. So in any case, again, today's move down right at this median line. Dollar index ICE has broken out to the upside. US dollar, the FXCM Dow Jones US dollar has not. Big reason why, of course, is that this includes the Aussie, but there's really nothing to shed light on here. We are still at resistance, okay? It's just that resistance like it's been for 3 weeks. So haven't broken any support. The closest we came to breaking support was Friday's move, which traded below the median line here, but obviously closed well above it. So had 2 touches on this median line since then, today and yesterday, Tuesday and Wednesday. But bottom line, at resistance, still there. Okay. All right. So that's it with the euro and the dollar indices. Again, big takeaway here as far as the ICE dollar index and the euro is concerned is that we've got a new high above July's high in the ICE, and we don't have a new low in the euro. Okay, so that's that. Let's go look at the pound. We talked about the pound as far as the short term and why that trade was done. So we've got BOE tomorrow, right? And I think it's a little different than it has been because From what I understand, they are going to make, they're going to have like a press conference or something where they usually don't do that. So it should be interesting to see how the pound trades. Look, obviously I don't have insight onto what the fundamentals are going to be, but I will note that since the bottom, okay, back here in April, we had that huge reversal bar. Since the bottom, pound's actually been trading in a pretty bullish manner, okay? And this bullish slope, and you're looking at it on the weekly chart, it's a lot cleaner when you look at the longer term charts, right? Gets rid of all that noise, all that crap that we're looking at. So the slope from this, right? I wrote this in the date, or in the long term page, but you can see the upslope resistance, okay, and then the sliding parallel, really good support here on the 8th, the week of May 8th, and at the June low here, the week of June 5th. Okay, so the next dip, the one that we got in July, we never reached that level. Okay, that in itself is bullish because that means you have, that's the raised floor, right? So you get higher floor or higher support, you therefore expect higher resistance or higher ceiling, okay, to put it simply. And in this case, that would mean that you'd expect a move where you came from resistance, you expect to move above that, which would be these levels up here. So we'd actually expect a move above this upslope here, which, at this point would be all the way up in the, would be all the way up in the 161 probably or so plus. So, indicates potential for a pretty big move to the upside. Now, of course, we have very, very, very long-term slope resistance that goes off the high from 2009 and 2011, and that comes in up here, which would be before then. So, if we do trade up here and break above that, super bullish for pound. Pound's acting really bullish right now. Okay, so as it pertains to cable, BOE tomorrow, we all know how the pound likes to just totally screw around, take out stops, take out levels that you think it's going to hold, and then go hard in the direction you thought it was going to go anyway. So in that instance, I'm open going into tomorrow, to see what's going to happen with cable. But I would, I'd keep a real close eye on 55.10, for tomorrow. And that's a few things. It's daily reversal support. Again, that's the low day of the move that we've had here. Okay, so within this range, that was the low here on the 24th, 55.10. It's also weekly reversal support. Okay, and that level's right here. Okay, so that's 55.12. Okay, 55.11.5. So basically 55.10 is just a big level for support for pound dollar, and might be one of those things where the market dips into there and then just absolutely takes off on the upside on a bullish BOE or a hawkish BOE. Okay, and I don't know if that's the case or not. I'm saying that because leading up to this BOE deal that we've got going on, the market's been trading in a very bullish manner. Okay, higher supports, etc., etc. So, that's what I'm kind of thinking heading into BOE is watching for 55.10 support in order to get long. Okay, let's look at Aussie. All right, so Aussie did follow through on its on its spike and actually nailed resistance yesterday pretty well, perfectly actually, and has come off now. Plenty of reasons to think that this is some sort of a bottoming attempt. All the reasons noted in the recent swing updates talked about the can't think right now. Talk about the momentum, right? The divergence that we've had going on, especially on the 4-hour. Talked about the reversal we had, the fact that we found support at this median line. Okay, so would be watching for support basically 73.07 right now, And oh, great. That's euro yen, 135.90. Okay. One reason to suspect, again, 7,300 is daily reversal support, okay? It's the close of that J spike day. 72.99, 73 is where you'd have two equal legs down from the high, okay? And 73.07 is the month open. So there you got a ton of stuff around 73, okay? Bottom line, watch this structure, this parallel, the bullish structure you've got going on here, okay? You know, it's been playing out pretty well. You know, we were looking for support on it before RBA and whatnot. Didn't really reach it. Pretty close. 72.59 was the low. Resistance has been hit perfectly. Pullback again could reach 73. So if Aussie's forming some sort of a bottoming pattern, then we should get support near 73. Okay. Kiwi dollar just made new trend lows. Don't have a whole lot to say at this point other than low today, 65.03. Oh, sorry, did not make trend lows. It was 6 pips shy, but getting awfully close. Only thing to say here with Kiwi is that, again, you want to watch, you know, I think that we're probably close to a big low in Kiwi. You know, the attempt up here failed, but I do think we're close to a big low, and the next big move to the, you know, is to the upside. Still doesn't mean you can't have 100 pips to the downside. Again, 64 is a huge level, 63.70 to 64. It's that really long-term Fibonacci confluence we talked about here recently. 2000 low, I think, to the 2011 high. The 50% of that is 63.70 or something, and the 61.8 of the rally from the 2009 low is 64. Okay, so, you know, the best indication that you get some sort of a turn in the market is when you have a change in behavior, right? And we don't have that, you know, at the moment. Okay, we did, but we don't right now as the market's come back into its downtrend structure. But watch for the median line here, okay? This, you know, that goes back several months. That intersects basically 64 over, you know, towards the end of the week. So like Friday, NFPs are on Friday and everything. So I would watch there. 64, keep that kind of on your radar for Kiwi dollar. And it's also the line that extends from back here, the September 2014 and then February this year lows. Okay, so we've got 64 as potentially in focus for Kiwi dollar, you know, towards the very end of the week. Okay, 6 days down in a row right now. Actually, just looking at that before the start of the webinar, and that's actually pretty rare. Hasn't happened all that often. But 64 is on the radar for me. Okay, and again, in order to get bullish here, you got to trade outside of this line, a sliding parallel. So keep in mind where we open the month, 66.02. Basically, 66 intersects. You know, what's this? I think it's next week actually, 66. But those are your levels for, you know, for Kiwi right now is basically 66 and 64. Okay, those are the big ones. All right. Dollar yen. Wish I had a clue. So again, here was the line that failed, but same uptrend resistance that we've had for quite a while. I'm not gonna pretend like I have much of an idea what's going on with dollar yen at the moment. So I don't want to force, something on this. But, you know, I will note that you do have the uptrend resistance here. So that's, something to note. Has given way to some pullbacks, right? This one obviously being the most material one here back in the early July. Okay. Euro pound inching into that low again, or a low, or the lows. Again, would watch 68.86. That could complete an ending diagonal, okay, from the May high. Again, that would be 1, 2, 3, 4, 5. Just want to see where you would have two equal legs down from the high. 68.71, so it actually lines up pretty well. So 68.71 to 68.86, a couple levels to know, or zone to know for euro pound moving forward. Euro yen. I'm currently short, but had a trend line break here, not on the day, but intraday. 35.75 was where we entered. I'm looking for former support here to provide, former resistance to provide support. I still think we could end up trading all the way up into the mid 139s at some point for euro yen, but I didn't think it was going to come from here. I thought it was going to come from closer to down here, 33.88, which is daily reversal support, as well as, again, you'd have this line up here, okay? Oops, did I move that? I did. You have the structure, which is former support, right? I keep saying that. Former resistance, you look for it to provide support, okay? So we have a very good intersection or confluence, if you will, with an upslope line and that mentioned downslope line on Friday. All right, so plan here is to look lower into Friday towards 34.90 or so, 33.90 or so, and then potentially look for a low. Now with euro yen, let's see here, find this thing. With euro yen, so here's an indicator that I run scans on, obviously quite often, as you know, the daily scans and stuff. But this is actually an indicator. I don't include the scans, and I've showed you this before, but this goes back to it's, I don't know how to explain it, but it compares rate of change, okay, with if euro yen, or if the price is at a new high or a new low for a move and whatnot. So it gives basically clusters of buying and selling signals. So the blue dots are buying and the red dots are selling. And for euro yen, it's worked really well over the last couple of years. They're not really signals, they're more like warnings. So I showed this when we were back in April, actually, when we had the bottom in euro yen, right? And that was one of the things we were looking at. Well, we have it now, as far as euro yen on the sell side is concerned. We got one up here in June, and we got one just last week. Okay, so this indicates potential for a more bearish outcome, and it's just that. It's just potential. It's not a signal, right? The signals can be very wrong, but when you cluster them together, a lot of times they indicate potential for a sharp move in that direction. In this case, that would be down. Okay, so just kind of heads up on that. If euro yen does end up trading lower and it's a big long down day and it breaks support, then it's something you want to stick with. But as far as I'm concerned, if we were to trade down into this is a short-term chart here. Let's see there. Okay. If we were to trade down into 3390, right down here, right, then I'd be looking for support. Okay, or I'd be willing to act on if you got some reversals down there, some hourly 4-hour reversals or something. But yeah, market came into resistance here, pulled back, and continuing to march a little higher. But okay, Euro Aussie, finally, let's look at that one, and then all right. So the J spike here on the 28th. We followed through obviously on that. Have actually now come into support, right? Sliding parallel here. The broader move for Euro Aussie, I do believe, is to the upside because, well, you have to respect it that way as long as you're above this black line, this lower parallel, right? So that's, if I just get rid of everything and except for that, you'll see what I mean. Okay, so yeah, that's what we're looking at. As long as you're holding above this, you kind of have to respect the upside. So, the next few days could certainly trade a little lower. Tomorrow this is 46.80 or so. Friday it's about 47, 46.95. So we could, trade lower. We're trading at the year open here as well, 47.75. So yeah, kind of easing into support here as far as Euro Aussie is concerned. Short-term Euro Aussie, got this really short-term picture, and basically we've just gotten into an interesting level for a very short-term resistance. Okay, got the median line from the highs, and this is a really steep one. Don't really like trading on the really steep the steep median lines. I'd rather trade on the upper parallel from that, but still something to pay attention to. The slope is, at least, because we have found a low on the bottom of it on the call that the downtrend support, the short term. As you can see, the bigger supports down here. Okay. So a long setup here would look like if you got something where you rallied up into somewhere up here and then found low at the confluence of this median line and uptrend support, the bigger uptrend support down here, which again would be near 47 or so. So that's what we've got going on there in everything we're pretty much looking at. All right. Okay. Let's take a look here. I'm going to take a look at the questions now. All right, hold on. Raj says, trades are giving me a headache. Yeah, well, me too. Let's see, if it doesn't break down, will that mean Euro Yen will be bullish? Joseph asks, if Euro Yen clears 136, where on the chart do you think it would head? So Euro Yen, if it clears 136, okay, hold on. Well, so here's the short-term Euro Yen chart. At this point, stops right here, right? So 136 is actually the month open price, and I like this is a decent slope. It seems to work with on the short term. Okay, so you've got. I think you should have solid resistance at 136 to 136.10. 136.10 is actually also the daily reversal resistance. Okay, but if the market were to trade above 136.15, 136.20, you'd actually be looking for resistance up here. Okay, in the 136, maybe, who knows, maybe 136.40 or 50. You've actually got a confluence over here on the 7th that's actually before NFPs. So right here, as far as, and then Raj had another question about moving to break even. If the market trades below 136, if the market trades below 135.50, then you might want to try to go to break even. But yeah, so to answer the question there about asking if it goes above 136, where could it go? Basically, the upper parallel is where I'd be looking for it to go. Okay, and that's, again, depends when it gets there, but over the next couple of days, it's between 136.70 and about 136.45 or so. Okay, but I'm expecting it to turn down. I mean, otherwise I wouldn't be in the trade. So, of course, it doesn't really matter what I expect these days. Market kind of does, there's just no rhythm, no feel right now. To the market, it's kind of super. I mentioned this on Twitter, I think, to Mark, but it's just super herky-jerky and very little feel right now. Gareth asking for Kiwi yen. Sure, hold on. So this was, we'll put up this chart 2 days ago in the setups. Hold on here. Sorry, I sound terrible. I've been sick all week. All right, so we put this chart up. This is Kiwi yen. All right. So we had 81.80 is marked as a resistance area, and did trade up into that area. So yeah, Kiwi yen, short side. Again, I like the short side on Kiwi yen. It's a matter of getting in the trade, I guess. Where you think that you have an opportunity to stay with it. You could still see a test near 82. Okay, maybe not 82, but 81.80. Okay, in fact, tomorrow you've got this really short-term upper parallel at 81.80, and again, that's the month open price. So, as far as Kiwi yen's concerned, 81.80 is kind of the big price for me as far as what I'd be watching. I'd love to say put a stop above 82 at like 82.10, but confidence in these setups at this point in these market conditions are pretty low. Markets, trading into levels and not really respecting the levels and setups that used to. So at this point, all I can give you is 81.80 resistance, and looks like there's plenty of downside potential for Kiwi yen. Again, the long-term support line extended off of here, off of the March 2012 high, was support here in 2013 in August, okay, and has been resistance for 3 weeks, since July 10th week of July 17th, and then last week. Okay, so there's plenty of downside potential again. Measured objective from this latest little range would be 77.63. The head and shoulders target that we had going on for a couple of years is all the way down near 74.45. And then you got the long-term trend line, which doesn't come in until a lot lower, right? That's, if it were to be reached at some point over the next few months, it's closer to 72. So there's plenty of downside potential in euro or in Kiwi yen, excuse me. The question is, are we done consolidating here? Is 81.80 with the 82.10 stop, is that enough room? Or are we going to continue to kind of trade around, mindlessly or aimlessly, between what, 82.50, 83, and down here somewhere, 80, 85, 81. That's the question. When I think of these two, this cross Kiwi yen, and I look at the separate legs of them, right? I see there's still downside potential in Kiwi dollar, but I think 64 is just a gigantic level. As far as dollar yen goes, I have no damn clue what dollar yen's doing at this point. I love the short idea on dollar yen and yen crosses yesterday because of that trend line, and then this morning I loved it because we held it and then came off hard, and then an hour later I hated it. So, that's just kind of the way it is right now. But maybe, I don't know. If I was just doing this and not doing a service, I'll be totally honest, I would probably not trade right now. But you guys, pay for setups, so we're trying to give you setups, but might have to end up putting just really small targets on a lot of trades at this point, right? Because until this dollar figures out what it's going to do, we're just herky-jerky all over the place, very little rhyme or reason to what's going on in the markets right now. So that's what it is with Kiwi yen. Basically, Kiwi yen, I like it lower, but confidence is pretty low across the board here. Pound CAD. Sure thing. Weekly chart, just above everything. So pound CAD, this is the weekly chart. This is old resistance. Okay, so this level should be support now if we ever reach it, and it's lower, but it's down here, 97. I mean, it's 1,000 pips, not 1,000. It's like 800 pips lower at this point. Pound CAD daily chart just continuing to ride this uptrend resistance. Okay, so each time we've been here, we've had a pullback, although it hasn't been clean from that level. We've been kind of, it's been spent a lot of time up there, right? So this is what, the third day spending time up here. I mean, you can see here we rode this thing and penetrated through it. As far as there being a trade right here, right now, pound CAD, don't see it. Pressing up against these levels, one would think that, it's a little overcooked here, but dangerous thing to say in a trend. It continues to ride along, very clean short-term structure. So pound CAD, just put this on your chart. The reversals that we've had from up here have in recent days, recent months, you've had some from up here, but it's extremely tricky situation trying to, pick a top like this in a very, very, extreme strong trend. So the only thing I could say is that if the market were to break this lower parallel, then you'd look for resistance on that lower parallel, okay, because it's been support before, and that's when you would potentially look to play reversal. At this point, I can say there's reversal risk up here because this is the same. We've reversed from this area before, but as far as it being a trade, I don't see it at this point. Okay. Alrighty. Okay. Do we have any other? Let's see here. Oh yeah, of course, absolutely. What we got here? Aussie yen and Aussie CAD, sure thing. Yeah, say okay. We'll look at Aussie yen and Aussie CAD here. So Aussie CAD, super interesting. Aussie might be bullish, generally speaking. Well, here's euro yen. Now this trade really looks like shit. All right, great. So Aussie CAD broke above the bearish slope. This is the bullish slope to work with now. Okay, so we've stopped at the median line as of yesterday. Would be looking for support. You could get it at 96.35 or so. That's this is the midline within the median line structure, and it's actually the former high from July. So that's an interesting spot because the combination of horizontal and slope. Okay, so I'd be watching there at 96.35 for support. And as far as where this could go, well, at this point you have what you'd kind of call like a failed head and shoulders. I talked about that a long time ago in one of the swing updates, but as far as a target on this, I mean, don't really have one. It's it's a range at this point. So look towards, well, look above here. I'd look above this level, last swing high. Okay, last big swing high, which is actually the January high. So I'd just follow the slope basically. So again, you've got 96.35 as the support to watch for at this point. Also, you know what? The best support, I don't know if we'll get this or not, but if you got this would be awesome. So this daily reversal support is 95.22, okay? This sliding parallel, which was really good resistance on like 1, 2, 3, 4, 5, or 6 occasions, going back to the March high, also would have the lower parallel there. So that would come in not for another couple weeks. This is like later in mid-August. In fact, this is like even into the 20s. So that could be a huge spot if Aussie CAD can make some sort of corrective, decline down into the into this region of 95.20 or so. that could really set it off for a huge leg higher. Okay. You could also see how that would, thinking ahead and kind of envisioning it, how that would, end up making a big bottoming process going back to the April low, right? So, kind of up here, dip, kind of a head and shoulders, if you will, on the downside, with this being shoulder head, and then dip here, shoulder. It would be one of the ugliest head and shoulders you've ever seen in your life, but the idea of three lows still stands. Okay, so Aussie CAD, this is what you want to look at, bottom line, okay? Break above here would be a break of resistance, then you'd look to be bullish on this median line. Again, the zoom and retest trade would be in effect here. Rally above it, pull back, watch for the median line to provide support. That's what we got with Aussie CAD. Aussie Yen, get the weekly chart. I'd watch this one chart, or this one line, and this one line only at this point for Aussie Yen. Okay, here's the really like Kiwi Yen, the super long-term trend line, which was broken the downside. 2009 low, 2012 low, 2015 January low, April low this year, and then we broke it with a gap nonetheless here in July. Retested that line a couple times. I would watch that line again for resistance, and it's like 92, 50, 60 or so this week. Okay, 92, yeah, basically 92.50, 92.60 this week, right? So here is the and that actually fits okay with this too. This is the 6-year trend line here on this daily chart. Put it in bold. And then you've got this shorter term, fork, which was the median line was really good resistance here. But the upper parallel from that comes into play just slightly higher. In fact, over like the next couple days, really. So this week, set the same level, of course, right? 92.50, 92.60, 70, whatever. Really 92.60. So you've got a big confluence there, 92.60. And remember, one of the things with median lines, with forks and whatnot, you can see you get this pullback, but it's after we've really traded sharply below the this lower parallel. So the upper parallel you would expect to provide resistance. Okay. So 92.60 Christian looks like a really solid level to watch for resistance. Okay. Okay. All right. So I think I'm going to wrap it up there for now, unless there are any pressing issues at the moment. Couple, I guess, just to summarize quickly. Current market conditions, difficult to say the least. Trading really, really short term might be your best bet at this point, like 10 pips at a time. Because as of the moment, right now there's just no field, no swings, nothing. It's really forcing it right now at this point. So we'd continue to, keep your eye on some of the dollar pairs in conjunction, in conjunction with the dollar index. The divergence with the euro today is interesting. Huge spot for the euro, 108.24. So we'll see if that level ends up holding up. If it does, then euro could scream higher, dollar could scream lower. That's the big question for me, I guess, right now is this dollar move through the high that we just had? Is that a bullish event? Are we going to follow through on this, or is it a fake out, right? And the fact that the euro did not make a new low does kind of, smell a little bit to me that something's wrong here. So we'll see. Your first indication that the euro is doing something else other than going down is going to be if it breaks above this this upper parallel, which it's really not that far away, right? So watch there closely. Okay, all right. So that's it for now to get this up and archived. Everyone take care. We'll try to get back on track as far as the trades are concerned. Maybe BOE will do it for us, because I've got some ideas on some good pound stuff, I think, heading into BOE. We'll be tracking for support to get long British pound down near 55.10 for cable. Okay. All right. So that's what we've got for now. Again, good luck and have a great rest of your week and weekend as well. All right. Take care.